Hi, I'm William Dolan, and this is Esquire Advice, where we explain complicated and lucrative real estate and business topics. Remember, we are not forming a lawyer-client relationship by way of this channel. Always consult your local attorney before taking any action. With that said, grab a pencil and a piece of paper and get ready to learn. Welcome to our episode on Series LLCs. There are many people who love the idea of a Series LLC. However, they can be a bit more complicated than people expect, and there are some drawbacks too. So let's tackle this topic by looking at the advantages and disadvantages of them. But first, let's start with a brief introduction to Series LLCs. Although the law varies a little from state to state, we're going to focus on Delaware Series LLCs because Delaware was the first to enact series statutes, and it is still the leader, in my humble opinion at least, on series entities. Having said that, it is important to note that not all states in the United States have enacted Series LLC statutes. There are only 11 states or so and one district that has enacted Series LLC statutes. The reason this is so important is that because most states do not have Series LLC statutes themselves, it is unclear how courts in those states will respond to the limitation of liability between the distinct series. I will come back to that point later. So I want to start with some general advice. If you can use a separate LLC to own each of your properties, that is the safest and most protective way to own your investment real estate. However, if cost is too prohibitive, meaning there's no way you would ever do that because of the costs, that's where I recommend that someone consider a Series LLC. And this is the reason. Let's say you own 7 properties owned all in the same LLC. Here, let's say there's a lawsuit relating to one of the properties and you lose that lawsuit. That judgment becomes a judgment against that LLC. Most, if not all, states in the US have what are called judgment lien statutes, where that judgment against your LLC automatically becomes a lien against the real estate owned by that entity. That means it is a lien against all 7 properties. If each property was owned by a separate LLC, it would only be a lien against one property because that LLC defendant would only own one property. However, if forming separate LLCs is not an option for you because of the costs, it would be better to use a Series LLC and have each property owned by a separate series than to own all of the properties in one regular LLC. So in this case, at least you would have, with the Series LLC, you would have the argument that each series should be treated separately and that the judgment should only be a lien against one property owned by that series. As you'll see in a few moments, it's only an argument and not a guarantee. Okay, so what are the advantages of Series LLCs? So the first and the primary benefit are cost savings. With a Series LLC, you only need to pay the cost to have a lawyer form one entity. It is true that each series needs to be created too, but typically lawyers draft their Series LLC agreements with a simple fill-in-the-blank document at the back of each Series LLC agreement to create a series. So you can just basically do that on your own. In addition to saving in legal fees, you'll also save in filing fees with the state because, for example, with Delaware Series LLCs, each series does not need to be registered. You only have the option to register them, not the requirement, but that is an option and it is less expensive than the filing fees to form a traditional LLC. Let's look at an example. Let's say your attorney charges you $1,250 in legal fees to form a Series LLC, including drafting and filing the certificate of formation, which generally needs to include magic language, and drafting the Series LLC agreement or operating agreement, as it's called in some states, which also needs to include magic language and a way to create new series. This is a bit more complicated than your traditional LLC, right? So because of those reasons, and because your attorney should be providing you lots of kind of do's and don'ts on how to operate your Series LLC, it does cost a little more than a regular LLC. The next cost you're going to have is the state filing fees, which are, let's say, $140. You'll also need to have a registered agent. If your series are not registered with the state, your registered agent's only going to charge you for the company generally. So just one time basically. So let's call this a fee of $100. That means your total cost to form a Series LLC is $1,390. And if you include the cost to pay the first year of the registered agent's fee, it's $1,490. Okay, so let's go back to our example where you own 7 properties in 7 separate LLCs. Let's say your attorney charges you $500 in legal fees to form each LLC. 7 times $500 is $3,500 in legal fees. Then the state will charge you $140 in filing fees, in our example, for each of the 7 too. So 7 times $140 is $980. Then the registered agent will charge you $100 for each LLC, and that's 7 times $100 equals $700. That's a total cost of $5,180. That means with only 7 properties, you've saved $3,690 initially, and you will continue to save money each year. First, your registered agent fee will be $100 each year with a Series LLC and $700 a year with 7 separate LLCs. Then, almost all states have some kind of recurring annual fee for an LLC. Let's use Delaware as an example. Delaware's annual fee for an LLC is $300 for each one. So if you have 7 LLCs, that's $2,100 a year. However, with a Series LLC, that fee will be $300 a year, as long as you're not registering any of the series, that is. That's a savings of $1,800 a year. When combined with the registered agent savings, that is $2,400 a year. So in sum, with 7 properties, you would save $3,690 upfront and $2,400 a year every year. Given that there's no limit to the number of series that you can have with a Series LLC, this strategy scales with the expansion of your portfolio and will continue to save you more money as you grow. All right, now what are the other benefits or advantages of a Series LLC? Some practitioners also argue that there are substantial administrative efficiencies too, although I'm not one of these practitioners. Nevertheless, I will explain the concept. These practitioners say that you can use one bank account for all your series, only have one tax ID number for the company generally and not every series. You only file one tax return, you can have all the properties owned in one name, you have one insurance policy, and so on. So we will come back to this momentarily. But for now, let's move on to the disadvantages. So disadvantage 1 and 2 are tied together, so I'm going to address them together. The first is uncertainty in the protections, and the second is there are few administrative efficiencies. In other words, there are many things that I believe you absolutely need to do at this point, with what we know at least, to give yourself the best odds of your Series LLC structure holding up, and most of these things erode the administrative efficiencies. All right, so let's go with a little background first, so you can understand why there's a difference in practitioners' approaches to Series LLCs. For those of you constitutional scholars out there, there is a full faith and credit clause in the U.S. Constitution that provides that each state will give effect to another state's laws. However, there are some exceptions to that clause. For example, a law that violates the public policy of State A would be a reason why State A would not give effect to State B's law, even if it were properly enacted. All right, so what's more, there's a case a few years back that caused quite a stir in the Series LLC world. I know because I worked at a big law firm in Delaware at the time this case came out, and we had many large clients reach out to us to seek counsel on the implications of this case. It was called Alphonse v. Archbay Holdings LLC, in case you want to look it up. In this case, the federal court sitting in the Eastern District of Louisiana questioned whether Delaware's law should be applied to determine certain series issues of the Delaware LLC that was operating in Louisiana, or whether it was Louisiana's law that should be applied since the plaintiff was a third party residing in Louisiana. So prior to this case, I think most practitioners had generally accepted that the internal affairs doctrine would control here. The internal affairs doctrine states that the statutes and case law of the formation state, so in this case it would be Delaware, right, will govern the internal affairs of a business entity, which would typically cover limitation of liability of a member of an LLC. However, the court in Alphonse questioned whether it would be the formation state or the forum state. So in this case, whether it would be Delaware's law or Louisiana's law that would apply. Since Louisiana did not have a Series LLC statute, if Louisiana's law was applied, that could have been a problem for all Series LLCs, not just Delaware LLCs, because this was more of a fundamental question and not something related specifically to Delaware LLCs. However, this was only a question posited by the judge in this case. It was not a conclusion of law. Nevertheless, it created quite a stir. We had mutual fund clients and real estate clients clamoring to understand whether this was a big problem or no problem at all. I was at the epicenter of this query because I had to do the research and draft the memo that provided the foundation for the advice that we ended up giving clients. Although I cannot disclose the fruits of that memo, I can state the obvious. Given that so few states have enacted series statutes, there's almost no case law on series LLCs, and because of the questions proposed in the Alphonse case, there is greater uncertainty with how well a series LLC will hold up in court, as opposed to if you had a bunch of separate LLCs owning your properties. Therefore, what many practitioners, me included, end up doing is providing more conservative advice, which increases the administrative burden for a series LLC and reduces its potential value since administrative efficiency was one of the two primary benefits of a series LLC. Okay, so what are we talking about here? We're talking about not commingling the assets and liabilities of the series. That means you must account for the assets and liabilities of each series separately. You must title each property in the name of the applicable series. It means having a separate insurance policy for each series, having a separate EIN for each series, having a separate bank account for each series, and so on. Now look, there's another drawback to series LLCs too, and that is on the financing side. So many lenders will not lend to a series of an LLC. There are a few reasons for this. First, some lenders have not invested the time and resources to understand series LLCs. Second, the uncertainty that we previously discussed has given some lenders pause. And third, in states that do not allow a series to be registered, lenders cannot obtain a certificate of good standing for the series, which makes it much more difficult for banks to discharge their Know Your Customer requirements. So the state of Delaware has recently started to allow, not require, but allow series to be registered. Now, there are some other states that have even required, if not given the option, to register series for some time. However, remember, when you have to register a series, that erodes the cost savings because you will have a registration fee, an annual fee, and a registered agent fee for each series. Okay, so some general tips here. Make sure if you're going to use a series LLC that your insurance agent, your CPA, your settlement agent, and your attorney understand series LLCs. Otherwise, it's going to be a big headache for you. Now, finally, if you can use a separate LLC to own each of your properties, that is the safest and most protective way to own your investment real estate. However, if cost is too prohibitive, meaning there's no way you'd ever do that because of the costs, then you should consider a series LLC because that will at least give you a chance to keep the properties protected from issues relating to other properties. I hope you found this episode of Series LLCs interesting and informative. Please feel free to forward this to other investors. I would love to have a robust dialogue on this topic. However, before you leave, please kindly hit those like and subscribe buttons so we can keep bringing you valuable and profitable content. With that said, have a great day, and I'll see you next time.